Welcome to the 50th installment in Trading Strategy Guide's Trading Education Series. Today we're going to analyze a few more trades. Stay tuned. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of our Trading Education Series. The last couple of installments I showed you recent trades that I actually took. Today we're going to look at opportunities that occurred using tools we've discussed in the series. I'll be going through quite a few charts today, so I won't linger on them. If you want to study the charts, feel free to pause the video and take screenshots for later examination. We're going to take a detailed look at a few of the most popular and effective trade setups for a trending market environment. We'll be taking a detailed look at these trade setups in view of the tools we've discussed in the Trading Education Series. The first of the three types of trade setups we're going to look at, trend continuation setup using support and resistance from previous breakouts. Number two is a breakout setup. And number three, a false breakout setup. The concept of old support becoming new resistance is really the definition of a downtrend. If we have successive instances of a series of these events happening, we begin developing a downward stairway, a concept that was mentioned during Module 2 where we defined a trend. The same is true in reverse for an uptrend where we have old resistance becoming new support. Let's take a look at some actual trade examples and see how you can profit from these trade setups. The first is a long trade example of old resistance, new support on a Euro-US dollar hourly chart. Remember, this is a trend continuation setup, so we first need to be able to spot the trend by simply glancing at the swing price structure. And at the current stage, highlighted on the chart here, we can't define a clear uptrend. Once we break a new higher high, we have established an uptrend, and now we can look at trade continuation setups at old resistance becoming new support. The next one is a long trade example of old resistance, new support on the Great British Pound US dollar 4-hour chart. The perfect trade continuation setup is the one that can be defined at the first retest of a broken resistance or support. In our case, we're highlighting a broken resistance. In this example, the retest of the broken resistance has been able to produce a pin bar bullish reversal pattern, which adds more confluence to our setup. I recommend at the beginning to wait for your favorite price action setup to show up before executing your trades. The main reason why the trend continuation setup using support and resistance from previous breakouts work is because the price has memory. Basically, when the price revisits a broken support or resistance level, those traders who previously shorted the market because we hit resistance are happy to exit, and they need to buy their trade back, which creates bullish pressure. On the other hand, a new category of traders will start buying because now the market is moving higher, which will add even more bullish pressure, so the market is forced to move higher and an old resistance now becomes new support. Next, we have a short example with old support, new resistance on the US dollar Canadian dollar 30-minute chart. Since the market is fractal in its nature, the same trade setups can be spotted on different time frames. In order to prove this point, we're going to look at and examine the anatomy of a trade continuation setup on the lower time frames. For this purpose, we've chosen the US dollar Canadian dollar 30-minute time frame. And the last in this category is a short trade example with old support, new resistance on the US dollar Japanese yen daily chart. It's time to illustrate again how you should trade a broken support that turns into a new resistance. Often when the market moves in a strong trend, it will fail to retest a broken old support or old resistance, which will lead to missing a trading opportunity. However, in this case, we have another trade setup in our trading arsenal that we can use, the breakout trade. The breakout trade is a more aggressive trade setup, but like the continuation setup, we want to make sure we only take the breakouts in the direction of the prevailing trend. We ignore the breakouts that happen against the trend because they have a higher rate of failure and they have a higher probability of turning into a false breakout setup. The first is a short trade example on the Great British Pound US dollar weekly chart. This breakout setup is the true definition of a breakout that leads to the development of a new trend. The anatomy of a good breakout is given by how strong the breakout candle looks. A big body candle that closes in the lower end of the body. As a general rule, the more significant the support or resistance level is, the higher the chances are that the breakout will lead to a significant trend development in the direction of the breakout. Next is a long trade example on the Australian dollar US dollar daily chart. A breakout setup offers two possibilities to have an entry. In the previous example, we entered as soon as we broke below support, but for a more conservative approach, we can enter after we close above or below the resistance level or support level. Typically, when we trade breakouts, we place our protective stop loss right above or below the breakout candle. This will protect us from a possible false breakout, and secondly, it will keep the risk at minimum while the potential profit can be substantially higher. Next is an intraday long trade setup on the Euro USD 15-minute chart. A breakout setup can be managed the same way on multiple time frames, and for this purpose, we're going to show the anatomy of a breakout on an intraday time frame. As I mentioned, this chart is a Euro USD 15-minute. The first thing we want to look at in a breakout setup is the candle body size. We need a big, bold candle that shows real buying and selling pressure to confirm we have a genuine breakout. And the last of the breakout setups is this long trade example on the USD Canadian dollar weekly chart. When we break above a multi-year resistance level, this has the potential to lead to a big bullish trend that can last for many years. In this example, we're looking at a USD Canadian dollar weekly chart and a broken resistance that was the starting point of a massive 2-year long bullish trend. Now, our last trade type is the false breakout setup. A false breakout setup is simply a failed attempt to break above or below a key resistance or support level. It's probably pretty obvious, but a false breakout setup is just the opposite of a breakout setup. We're looking at a simple setup where the market gives us the false impression that it wants to go in a particular direction, but it's really looking to go the other way. The only way to successfully trade false breakouts is by including some basic price action setups in your analysis. Let's look at an example. The first characteristic of a false breakout is the long candle wicks that come off of support or resistance levels, which shows rejection like this 15-minute Great British Pound US dollar chart. Often a new trend can start from a false breakout because the order flow dynamics on a false breakout change quickly. The false breakouts are usually a trap set by the smart money traders. They need the liquidity to fill their big orders and try to fool other market participants to their advantage. In this example, our trade entry was not just the break below the resistance level, but we waited for a break below the low of the breakout candle. As a second entry technique, we can use a retest of the broken resistance or support as our entry trigger, like this 4-hour Australian dollar US dollar chart. We can add one step further and wait for our favorite price pattern to develop here for an entry trigger, but there is the risk of missing the trade if no setup develops at the broken resistance or support level. The ideal breakout setup is the one taken in the direction of the dominant trend. Here's an example of the Euro US dollar daily chart with a false breakout above resistance and against the trend. The breakout fails, and after a successful retest of the broken resistance, the downtrend resumes. The false breakout setup is well known to produce big trend reversals like this example on the hourly US dollar Japanese yen chart and a false breakout of support level. One of the characteristics of a false breakout is that the price reverses very quickly from a false breakout above resistance or below support because the supply and demand imbalances cause a spike in the volatility. We covered the characteristics of the most popular trend trading setups, but it's your job to figure out which one you feel more comfortable trading. Your trading style and personality will determine how you will approach them. However, in the grand scheme of things, each of these trade setups can give you further insights into who is in control of the market, buyers or the sellers. And that's it for today's video. Next week, we're going to talk about making big bucks and losing big bucks. Intraday trading. That should be fun. I mentioned earlier that I would tell you about the Cash Alerts app. With this app, I can share all of my trade setups and my trade tracking and even chat with you guys and answer questions. The trade setups from the Trade Picks videos are available on the app, plus the other trades I personally take every week. Here's a screenshot from late Tuesday of our currently active trade. The Cash Alerts app is available for iPhone, Android, and desktop browser. Click the link in the description below for more information. And come back Friday for my strategy of the week and next Monday for my trade pick. My videos come out at 3 p.m. New York work time on those days. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, smash that like below. Subscribe and hit the bell if you want to be notified of our videos in the future. Have a great Wednesday, and I'll see you on Friday.